Let's go across to Pankaj Pandey as well. He's joining us to talk to us about some of the stock-specific action. Pankaj, I wanted to begin by asking you about Tata Motors and how the entire auto space is panning out. Do you expect that the underperformance of Tata Motors is set to reverse in 2023?
Hi, good morning. I think overall auto as a space is looking quite attractive to us. I think Tata Motors specifically, we have seen good amount of margin uptick across categories, be it JLR, be it PP business or the CV business. And compared to that, we were sort of anticipating a loss the last quarter, but actually they rolled out profit. Now, good part is that when you sort of look at going forward, both the segments, which is PV and CV, are looking attractive to us. So they're penciling in somewhere about 13% kind of a top line or volume growth and about 17-18% kind of a volume growth. Now, EV is one business where we are quite hopeful on. So we have a target price of 530 on. In that, the EV business is valued at about 158 odd, and that was again on a previous valuation. So I think with China sort of reopening and domestic market sort of looking good for the next 2 years, along with that, the margin expansion, what we have seen in the last quarters, I think our sense is that this is one stock which can outperform most of the Nifty components.
I just want to get your views on, Lawrence Belanco's thoughts, both on Maruti as well as Tata Motors. And let's first pick up on Tata Motors, considering that's a stock that you've been recommending. Below the 200 DMA, he believes that the stock is making several lower highs right now, and he does see downside risk on both Tata Motors as well as Maruti.
Yeah, I think the observation with the stock has already gone through a pattern of lower highs and lower lows. I think if I'm not wrong, from 550, 560 levels, where Tata Motors hit, I think 2021, when you look at the last 1 year of chart patterns, the stock is consolidating in a manner of making lower highs and lower lows. But then, we look at the broader pattern that from 60, 64 rupees or from 2020 lows, the stock had done exceptionally well, moving up almost 8-9 times from those 60 plus levels. And then when you look at such kind of a meteoric rise in a very short span of time, the stocks, the sectors, they are bound to get into a time-wise correction as well as a price correction. But for Tata Motors, the only good part is that the stock has gone through more of a time-wise correction rather than a major price correction. So I think that's the only positive part for Tata Motors. I would still be bullish on the stock, and I think even at current levels, maybe the stock could probably dip back towards 410, 415 levels. But then I think that could probably be an attractive zone to buy the stock again.
Okay, in fact, since we're on the subject of Tata Motors, let's address an Economic Times story as well this morning. And the paper reports that Tata Motors has begun discussions with sovereign wealth funds and private equity investors to sell a significant minority stake in its EV division. And it's a slew of potential buyers that Deboshi Chaki is picking up right now. Deboshi, hi, morning. Good to have you on the show. Tell us, who could these potential buyers be? What are you picking up?
Thank you very much. Like we have reported, there are a clutch of sovereign funds and also global private equity investors. We understand there is ADIA and Mubadala from United Arab Emirates. There is Saudi Arabia's Public Investment Fund, Temasek from Singapore, and also global PE funds like KKR and General Atlantic. So they're all engaged in the discussions. Of course, there is not full certainty that over the number of investors who will ultimately invest. We understand that the ask is, around 15% to the last valuation round, which was around $9.1 billion. You remember last year, TPG was one of the investors who had invested in the EV business. So this time we understand the ask is around 10 to 15% premium from that valuation round. We also understand that once the deal closes, the proceeds of the sale, the money raised, will be used by the company to retire its debt. There is also a possibility that a small amount might come for the company as private equity, which will be used for the company's growth plans. But largely, the money raised will be used towards debt repayment, which is in line with Tata Motors' announced policy of becoming a zero debt company going forward. Which will obviously have a significant impact on its margins once it is able to retire a large part of its debt.
Got the point. Just wanted to understand, it's quite exciting space, right? EV to be in. We saw Tata Motors doing first fundraise, then M&M did a very big fundraise. TVS is in talks, and now you're seeing second round of Tata Motors, which actually shows that there is a lot of money to be put into R&D of these companies?
That is right. There is a lot of global interest in general around the EV space, and India being one of the most exciting markets, one of the fast-growing markets. There is definitely a lot of interest in investing in EV businesses, and that is probably the reason we are seeing so many transactions in this space, happening in a very short span of time.
Okay, Devashish, we'll let you go on that note. Thank you so much for joining us this morning. But on to some top fundamental ideas now. Himang Jani, equity strategist, senior group vice president at Motilal Oswal Group, is bullish on APL Apollo Tubes as well as some Vardhana Motherson. Let's listen in.
Cap space, there are names like APL Apollo Tubes, Poonawalla FinCorp, Metro Brands, Lemon Tree Hotel. These are the names where we've seen fairly resilient numbers, and where our outlook in terms of earnings for this year is very strong. So these are the names where we would be buyers at this point, or if there is a small correction, let's say 5-7% over the next few days. That will make them even more attractive. And from the large cap space, I think auto remains to be on the top of the list, and Mahindra, Samvardhan Motherson, Maruti, these are the names that we would be positive on. And of course, IT is something that we've seen some stability coming through. And we think that over the next few days, so names like TCS, Infosys, HCL Tech, these are the large cap IT names where we have a slightly more comfort because of the lower valuations.
Okay, just looking at the market texture yesterday, while of course the Adani Group entities got clobbered down and Adani Enterprises was down another 11% today, what would be intriguing to see is that given that today is the expiry weekly, what really transpires with this particular cluster today. Having said that, there were just very few hiding spaces yesterday. A one-odd Oro Pharma, Glenmark, Voltas, and maybe to some degree ITC fell a lot less than its other nifty counterparts. That closed in absolutely flat for itself. But Pankaj, any buy recommendations that you would have? Any stocks that are looking attractive in this current decline if it were to excruciate or, get a little exaggerated from these levels?
So I think from a sectoral perspective, I think we have started liking some of the PSUs, say for example NTPC or something like say ONGC. Besides that, I think our sense is that banking has been sort of struggling for some time. But given the fact that IT overall, since the US Fed is still hawkish, probably the kind of run up what we have seen in the 5-6 probably 1.5 months in IT probably might take a pause, and banks ideally should sort of do better from that perspective. And you've seen banks sort of doing well, especially on the unsecured side of the portfolio. Most of the banks have been sort of inching up that portfolio. So NIM expansion can still sort of pan out in the next quarter. And valuation look reasonable to us. So we like something like HDFC Bank or Federal Bank. And then I think in some of the mid caps, for example, Techno Electric is one company which missed out in terms of numbers, largely on the execution side. But our sense is that Q4 ideally should be a lot more better than what we have seen. We like some of the other names like Action Construction Equipment, largely from a overall capital goods perspective. And then within software, we like small cap companies like say Newgen Software, where the management is quite confident of delivering good double-digit growth over the next 2-3 years. So again, it's a very sort of a stock-specific market as of now.
Just looking at the Credit Suisse report on internet stocks, and they're saying that the internet economy growth is surely slowing down. Having said that, they do believe that they expect the e-commerce growth to actually start normalizing towards the trend line. They're saying that they like Zomato, given the favorable industry dynamics and push towards profitability, saying that they're still cautious on Nykaa because of the competition in its core beauty segment, and the reopening segments are the ones which are seeing good growth. Pankaj, I'm wondering after the recent fall, which of these new age tech companies look attractive to you? I mean, be it PB Fintech, Delivery, Nykaa, or a Zomato or Paytm?
So we don't track any one of them. We have not been sort of tracking a lot of these names for a good period of time. I think we are still not very sure in terms of in terms of path to profitability, and so I think the only expensive companies which you were recommending was our Cramspare, which was sort of trading 8 to 10 times. Beyond that, I think anything which is available 10 times sales does not look sort of attractive to sort of justify at current levels. So from that perspective, I think we are sort of slightly shying away from high P or high valuation companies and preferring to more sort of traditional players. Say, for example, NTPC, which is trading at 1.4 time book, or ONGC, which is trading at say 4 time P multiple, with a 8% kind of a dividend yield, and probably an expectation that next year you'll see 4 to 5% kind of a volume growth panning out.
Okay, so that's the take coming in as far as some of these names are concerned. But Pankaj, what about the entire IT space and mid-cap IT specifically? A lot of niche names are doing well, whether it's Persistence, of course, Coforge as well as Tata Elxsi haven't done much this year, but they had run up considerably already. And KPIT Tech also seems to be on a tear of late. And this morning we have the news coming in on Sonata Software making that large acquisition. Is there any other any top name that you would want to recommend from the mid-cap IT?
So one name which we like is Newgen Software, where our expectation is, or the management is quite confident of delivering 20-22% kind of a top line and bottom line growth. So that is one stock what we are liking. Besides that, I think Coforge is one of our top picks, largely because this is one company which is quite confident of delivering 22% kind of a constant currency growth and likely to maintain 16-17% kind of a growth even a year after, and has got one of the lowest attrition. Then travel as a vertical, which is one of the biggest vertical, has been sort of doing well compared to pre-COVID. So I think this company looks a lot more sort of better. But like I said, in general, we have seen decent run up in the last 5-6 weeks for most of the IT names. So I'll not be really sort of chasing these names at higher levels.
Okay, so that's the word coming in. Newgen Software is something that you're quite positive about. But let's take a look at some of the other stocks which are likely to be big buzzers today. Of course, we talked about Tata Motors and Sonata Software, which is going to be on everyone's radar. You also have Mahindra CIE, which reported numbers, which on a top line basis and profit from continuing operation looks quite strong. Tata Steel will be in focus because they've acquired shares of Neelanchal Ispat plant, so that will be interesting. Gujarat Gas has hiked the prices of their commercial PNG, so we'll watch out for that. And Greaves Cotton too has announced some leadership changes at the lower level, so we'll watch out for that. Apart from Orient Cement, wherein there was actually a negative news, they were earlier trying to set up a unit on the land with Adani Power. That deal or pact has been cancelled for now, so that will be interesting. And of course, delivery will be on everyone's radar given that big block deal happened yesterday. And is there any other further liquidity pressure that we should envisage is something we'll watch out for. But let's get you some more fundamental ideas now. Neeraj Diwan, Director Quantum Securities, is talking to us about his top bets.
First 9 months, we've seen good growth, volume growth in the tobacco business domestically. And even the global business, that is the export business, has seen good growth because of good growth from the tobacco leaf business that they export. And the domestic business, which is the non-tobacco business, has also seen a 20% Y-on-Y growth in the 24/7 sales. So I think this is more because of the increase in mobility post-COVID. It's a debt-free company which has cash. If you consider the investment it has in the mutual fund, so there's no debt on the books. And the future strategy is to grow all the three businesses: the domestic tobacco business, the international tobacco business, and the non-tobacco business as a 24/7 retail stores. So all three will see decent improvement going ahead also. So if you fairly see on valuation, even if you value it at 15 times 1A forward, which has been the historical valuation, the stock can give you 30% return from these levels. So I have a target of 2,300 for this for 9 months, 9 to 12 months.
Okay, let's discuss more stocks which are going to be in focus this morning. And Citi has maintained a buy call on sale, opening an upside of 90-day. The catalyst watch on the stock. Let's take it across to Sharad, find out more details. And Sharad, what makes them so bullish on sale?
Well, yes, Citi has come out with this report on sale and it has opened a 90-day positive catalyst watch. That means over the next 90 days, Citi is expecting that the share price is expected to go up on the positive side. Apart from this, they have given a maintain buy rating with a target price of almost 100 rupees per share. Now, they have stated that the EBITDA per ton, the operational numbers are sustainable at the current market prices if they are assuming that the coking coal prices stand at almost $350 per ton. Now, that is a raw material for steel companies. And of course, the 5-year average, if you see, Citi has stated that they are suggesting that the sales stock price is at attractive levels and there is a strong upside potential going ahead. Now, looking at the numbers, especially the sensitivity part, that is where the sale kicks in, and that is having a very high sensitivity as compared to its peers. To put it in simpler words, that means is like every $10 per ton change will actually impact the EBITDA numbers of sale by 15%. So that sensitivity level is very high. And now they're expecting that the domestic flat steel prices, that comes in the range of current market price of 59,000 to 60,000 rupees per ton. So any kind of upside move in the steel prices in the domestic space, you see there'll be a strong correlation going ahead for the stock price as well. That's what Citi is stating. And just looking at the stocks moving numbers, however, slight correction was there. Stock is trading below the 50 DMA, down 9% from the January highs, but the analyst community is still having mixed kind of emotions, which almost 44% analysts have given a buy rating out of the 27 analysts tracking the stock, with the 12-man target price combined at 93 rupees, indicating a 10% upside potential.
Right. Okay, Sharad, we leave it at that. Meantime, the NCLT has admitted an insolvency petition filed by IndusInd Bank against Zee Entertainment. Let me take it across to Ankur Mishra, my colleague, and get in more details on what exactly happened here. Ankur?
Yes, Zee Entertainment has been dragged to NCLT by IndusInd Bank, and now NCLT has admitted the petition of the lender. Now the claim is that as per the debt service agreement in which IndusInd Bank had given a loan to City Networks, Zee Entertainment was a guarantor, and according to that agreement, some amount needs to be kept in the account as per the guarantee, which Zee Entertainment failed to do so since 2019, and therefore a petition was filed at NCLT by the lender, not only claiming defaults from City Networks but also from Zee Entertainment. Now this is important because once a petition is filed, there will be due proceedings which will be conducted by the interim resolution professional, which has been appointed by NCLT, and all other creditors also can make their claims. Now, in a response to the queries which we had sent to Zee Entertainment, Puneet Goenka, the CEO of the company, has said that there will be no delay in the merger with the Sony Entertainment, and all the due courses, all the due steps which needs to be taken will be taken for the merger, and this is guided by the legal advice which the company is receiving. Now it seems like that this battle may go to higher courts, and we need to wait and see whether or not there is any impact on merger or not.
Right. Okay, Ankur, we'll leave it at that. Pankaj, just wanted to get your thoughts in on the NCLT admission in IndusInd Bank's insolvency plea against Zee. I'm guessing this would be a bit of a negative news for Zee.
Yeah, absolutely. So one is, see, even if you look at the last quarter, the ad revenue growth has been quite tepid, while it is expected to improve. But I think when you also look at the working capital, it's very difficult to sort of figure out if the company is putting a lot of money in the movie business, how the revenues will pan out. So, and then you have a lot of these linkages with the group companies, which is where things are not very clean, or we really do not have enough clarity in terms of who's going to share that burden. So from that perspective, while the merger is the only sort of positive thing to sort of look at, but I think you still have a lot of challenges with the company, and which is why the stock has really not been sort of doing the kind of performance what one would have expected post merger. And I continue to believe that it will continue to sort of struggle at current levels.
Pankaj, when we just look at how essentially some of these e-commerce companies have fallen, from the levels, are you looking that they are just trying to find their valuation. They may be buy, they may not be buy. But it's the first time in 2 years that you're seeing these sort of companies getting listed, this sort of supply coming in any shares. Do you believe they are in a space where they are just trying, the market is trying to find a proper PE or a price to sales multiple for them?
I think till the time we really do not have a stable period of, say, revenues and also margins and profitability, it's very difficult to sort of pin all the hopes on the future improvement in terms of margins and all of that. And I think the other challenge is that when you look at for some of these companies, it's not a white space. I think except for Zomato, which looks from the perspective that it's a habit forming kind of a segment which they are into, and obviously they could have some bit of a pricing power. But whether you look at, say, delivery or a lot of other names, it's very difficult to sort of pinpoint or figure out that a B2B business like delivery will continue to have or will have margin or pricing power. So which is why we are still not very clear in a lot of these names, and which is why we have been not really sort of tracking a lot of these names. I think we still need some bit of a stable set of numbers for to sort of get clarity and to sort of look at how things will pan out in future. So which is why we've been avoiding this space for quite some time. Besides, obviously, valuation is still rich.
I'm just looking at the Adani Group entities and the kind of fall that they have had actually from their all-time high. Adani Green Energy has seen a fall of 82%. Similar has been the case with Adani Transmission, which has fallen about. This is just the yesterday's move. If we can just bring up the fall from the high, we had those graphics run up yesterday as well. Adani Total has fallen about 79%. Adani Enterprises, which yesterday alone fell over 10%, has fallen about 66% from its all-time high. NDTV down 65%, Adani Power down 62%, Adani Wilmar, which was one of the most fancied IPOs in the recent times, that's also fallen about 55%. Ambuja, Adani Ports, ACC, all anywhere between about 45 to 38 odd percent or so. Naresh, do you sense that given that there's expiry as well, which is going to really act up on these names, we could see further pressure build in on the Adani Group?
So on the Adani Group, only Adani Enterprises and Adani Ports are in the derivative side of it. Adani Enterprises has come back all the way back to 1400, and the last low was 1000. It made a recovery almost to 2200. So I think much of the pain is over. I would not expect it to break below 1000 as quickly. Adani Ports also saw a very strong recovery from 400 to almost 600. So that is some pressure which can come over there, but 500, 520 should hold over there also. But this is a tough sector to pick of stocks to actually watch out for, because their volatility is all over the board. So the only space as of now which still looks interesting is that Ambuja Cements at 330.
Naresh, let's not, okay, Adani Group of stocks, you gave your view. But what is your view on Tata Group actually, not seeing? It's just a function of flows. You believe names like Tata Motors, okay, TCS can move its own, but Tata Steel, Tata Motors, that as a pack can do well?
So as a pack, we need to look at all these companies are in different sectors and different trends are going on for a lot of them. In 2021, there was a re-rating moment for the whole Tata Group. I think that part is over and now every stock will move on its own. But Tata Motors and Tata Power is interesting for the fact that after making this huge move in 2021, they've gone sideways for the last 1.5 year to 2 years. So if you look at Tata Motors, it spiked up to 500, 550 levels back in September 21. And since then, it has gone nowhere. It continues to be at 400 to 460. Tata Power, after going from 60 to 290, is now struggling at 190, 200. 6 attempts made around those lows. So yes, in the Tata Group, Tata Motors and Tata Power are the interesting names. Tata Steel is a difficult one given the cycle is over for a lot of metal stocks, and it has been an underperformer now. So I would be watching out for Tata Motors and Tata Power. I continue to like Tata Power, which is where the risk reward is very interesting at 200 levels.
Pankaj, what will be your view as far as IT pack is concerned? We saw a rally in the large cap space after the numbers till now. Do you think the time has come to look at some of the mid cap ones?
I think on the IT side, probably according to me, it's probably some time to sort of book profits because see, when you look at US as a market, while these spends or TCVs have been good for most of the companies, quarter-on-quarter growth has been sort of on expected lines. Margin expansion of say about 100 odd bips for some of the companies was on expected lines. But I think the challenge is that if US is going to sort of tighten or continue to tighten, and your jobs data and inflation is not really sort of coming on expected lines, then our sense is that probably one needs to be a bit cautious given the fact that we have seen some bit of a rally in the IT as an overall pack. So from that perspective, I'll be slightly cautious at current levels. But having said that, whenever this volatility or clarity emerges from a US market, then IT could be one of the best contra plays to sort of look at. But till that time, I think it's probably a time to sort of book profit in some of these stocks which have rallied.
Sonata Software is the other one which is going to be in focus, and we flagged this off earlier as well, that they've acquired a Texas-based Quant Systems in an all-cash deal for 1,300 crore rupees. Now, one must give you a little bit of a backdrop because this is the biggest ever acquisition in Sonata Software's history. They've signed this definitive agreement with Quant Systems Inc. They're going to acquire a 100% stake. It's an all-cash deal. This is, of course, going to accelerate Sonata's capabilities in modernization, digital engineering space, etc. But yes, the valuations is something that could be debated, especially in the current market environment. Kunal, TCS is one stock that you're bullish on, but would you be looking to broaden, your exposure to IT and maybe look at some of the mid-cap IT names?
Yeah, there are quite a few. In fact, I think one of the top candidates which has emerged as a huge potential breakout is Tech Mahindra, which has been a huge underperformer. The last, I think, 1 week broadly, the stock has recovered from 1,050 to I think 1150, 1160 mark. And then from there, the stock has come back towards a retracement. I think that's a classical buy. The stock had given all signs of a positive breakout, price volume breakout, indicator breakouts, as well as a start of a fresh trend breakout. And even if it tries to cover up the underperformance, I would believe that there should be at least a potential 10% up move, which should be further left for the stock price. And if it starts to trend, then the returns could be far more higher for the stock. So given the time frame of maybe another 2 to 3 weeks, or say broadly, I think 1 to 2 months, I would probably be bullish on Tech Mahindra. That would be the other stock which other than TCS.
Tech Mahindra would be the other one versus TCS.
Yes.
And if you want to go down to the mid-cap list, a lot of other mid-cap names are, also in focus. And generally, we tend to see that first the large caps do well, then the mid-caps in IT do well. It's been a trend that has been there for long. Any view on that?
So I think from the non-F&O stock, if I can call it, from the mid-cap space of IT stocks, Redington is something which I would be bullish on. I think from 200, 204 odd levels, the stock has corrected towards 166 yesterday. So again, a stock which I think has done pretty well for itself on the mid-cap IT stocks. If I'm not wrong, was one of the first ones to try and come back towards the previous major highs of 2021 and surpass those levels. So I believe at 166, the risk reward is again very favorable to initiate a fresh buy in Redington.
Let's just bring up one more big loser from yesterday, and that was Aditya Birla Fashions. Fell 5%, and in comparison to that, we've seen the word, how a trend, for instance, has actually panned out. Pankaj, I don't know where your biases lie when it comes to this entire retail play, but ABFRL versus Trent, if you could stack up both and tell us whether you're recommending a buy on any of these at this current juncture.
So Trent obviously has seen one of the most superlative growth. I think last 3 years, the CAGR has been about 36 odd percent. And so which is why they are sort of an outlier in the entire retail as a pack. And especially the Zudio format for them has been sort of doing very well. But compared to that, when you sort of look at the ABFRL or a number of other names, things have been softer for them. One, because overall we've seen good appreciation the price hike has been quite aggressive. And our sense is that probably things will turn softer going forward for most of these players. And obviously, ABFL also sort of competes with Reliance Retail in terms of acquiring niche brands and sort of trying to sort of do a massification of those brands. And so I think Trent is something which is quite expensive. I mean, when we sort of look at, say, between Shoppers Stop and Trent, Trent is nearly 3 to 4 times expensive compared to what Shoppers Stop is trading. So that is one which continues to sort of do well. So which is why we like that. But any kind of a correction, I think, will be a better buying opportunity. Shoppers Stop is another play which we like. One, the valuation is quite attractive. The other is that while we have not seen a very good set of numbers, but our sense is that as and when your value play from the perspective that if your homegrown brands are going to sort of do well, so that will sort of lead to better margins for the company. And which is why I think Shopper Stop and Trent look good. I think rest of the other players probably will have some difficult time given the fact that price been quite high and probably the footfalls or the kind of revenue per square feet may not really match up to the kind of expectation what one would have.
Pankaj, we let you go on that note. Thank you so much for joining in.